Hey everyone, welcome back to the channel. Today we're diving into something that's reshaping the entire investment landscape, AI infrastructure. Now, I know everyone is talking about AI, but we're not looking at the usual suspects here. We're going deeper into the companies building the actual foundation that makes all of this possible. The pipes, the cooling systems, the chips, the networks, the infrastructure that has to exist before any AI can even run. I've got some stocks for you today that are positioned to ride this wave for years, maybe even decades to come. Some names you will recognize, others might surprise you, but all of them are playing critical roles in what could be the biggest infrastructure build out of our generation. So let's get into it. Data centers are not going anywhere. We're talking about growth that will stretch through the entire 2030s. And here's the thing, we're really at the beginning of building out AI infrastructure. We haven't even scratched the surface yet. Right now, the worldwide market is expanding at roughly 45% every year. All kinds of sectors are cashing in, and these deals keep coming through. The big tech giants, your hyperscalers, are locked into agreements to construct these facilities, so the money is already committed. Now, I put together some AI infrastructure companies worth considering if you are investing for the long term. These are positions you want to think about from a future perspective. We're not talking about quick flips here, so the question is, are any of these major players missing from your holdings? Let's break it down. AI infrastructure is the hottest topic in investing right now, and for a good reason. We've been covering this build out extensively over recent months because we're literally watching it unfold in real time. This is a brand new territory we're navigating, so let me put this in perspective for you. The scale of this AI infrastructure build out is absolutely massive, and here's what you really need to grasp. This isn't some short term trend we're riding. We're talking about an investment thesis that spans years, maybe even decades into the future. Now, most people only think about the obvious names when it comes to AI stocks, the ones everyone's heard of. But here's where it gets interesting. There's actually room for tons of other companies to thrive in this space. We're talking about opportunities in sectors you might not have ever considered before, companies that are flying under the radar but are essential to making all of this work. Look, I don't want to undersell just how much money is pouring into AI infrastructure right now. The investment levels are staggering. Think about it historically. Remember when we built the interstate highway system or when railroads were connecting the country? Even when telephone lines were going up everywhere. Those were cutting edge technologies that required massive investment and took years, sometimes decades, to complete. What we're seeing with AI infrastructure, it feels even bigger than all of that. And you don't even have to look back that far for comparison. Just 30 years ago, we were building out the internet itself, but here's the crucial difference. AI infrastructure isn't just piggybacking on what we already have. Sure, it sits on top of the internet, but it needs its own separate foundation, its own infrastructure layer that has to be built from the ground up. We're not just adding features to existing systems. This is a whole new architecture that needs to be developed independently. Alright, let's jump into these companies that are positioned to be major players in this build out. You will recognize some of these names immediately, while others might surprise you. They're not the usual suspects everyone's talking about. First up, Nvent Electric, trading under the ticker NVT. Now I'm starting with two companies that are tackling something critical, liquid cooling. Let me explain why this matters. We've got all these data centers being built right now, but let's rewind about 20 years to when the AI revolution was just beginning. Back when we started seeing the birth of what we now call the Magnificent Seven, companies like Alphabet and Meta, Nvidia, these server farms have always had two fundamental needs. They need to constant round the clock power, and they absolutely must have a way to cool down all that equipment. Without proper cooling, these servers would overheat and fail. This is where liquid cooling comes into play, and it's becoming a massive growth area. Check out these numbers. The global liquid cooling market is currently expanding at about 45% per year. Now compare that to the overall data center market, which is only growing at around 1% annually. That's a huge difference. And get this, right now only about 5% of data centers are using liquid cooling technology, but analysts are predicting the number will jump to 23% by 2028. That's why this market matters, and more importantly, that's why now is the time to get positioned in it. So let's talk specifics about MVT. They've captured roughly 40% of this liquid cooling market, and it already makes up about 23% of their total revenue. What's really impressive is their partnerships. They're working directly with all the major hyperscalers. We're talking Nvidia, Amazon, Microsoft, the giants building these data centers. And they're not just supplying solutions for current needs, they are developing technology for the next generation of platforms these companies are planning. Essentially, NVT has made itself indispensable and locked down a significant chunk of the market. Now, I know that some of you might be thinking the stock looks a bit pricey. It's trading at a forward PE ratio around 31 and it's already up about 40% year to date. But here's my take, you need to evaluate this one with a long term lens. Focus on where the growth is headed, not just where we are today. If you've been sitting on the sidelines waiting for the perfect entry point, I don't think now is the wrong time to establish a position. Now, let me address the elephant in the room. When you see growth rates like 45% annually, it screams opportunity. But the real question everyone is asking is, has all that future growth already been baked into the stock price? Because let's be honest, a lot of investors are already focused on AI infrastructure. They're not blind to what's happening. So you might be wondering if these stocks are trading at premium valuations simply because everyone already knows about them. And here's my honest answer, yes, some of them are. You're probably going to pay a bit of a premium to get into these positions right now. But if you truly believe in the data center growth story, and I do, then you need to think about what we just discussed with those growth rates. The liquid cooling market is barely getting started. If MVT is trading around $99 today, where do you think it will be in a few years when this market really matures? The money you invested today is going to look pretty small compared to where this could go. So, yes, at this exact moment, you are paying a premium relative to current earnings, but what you're really paying for is the future earnings potential. That's a trade off you are making. Alright, let's move to company number two. This one's also in the cooling sector, but there's a key difference here. This is Vertic Holdings, ticker symbol VRT. If NVT was a lesser known player, Vertic is probably the name you're more likely to recognize. They're also providing liquid cooling solutions for data centers. The stock's up about 19% year to date, but what's really interesting is the momentum it's built over the past 3 months, and there's a specific reason for that surge. During the most recent earnings season, all the major hyperscalers, Microsoft, Meta, and the whole school, came out and basically said, full speed ahead on their data center capital spending. There had been some worry going into earnings that maybe these companies would pump the brakes on their infrastructure investments. Nope, not happening. They are going all in. And this is exactly why getting positioned in these companies now matters. You want to be in on the front end of this build out, not chasing it later when the obvious gains have already been made. The investment flowing into this space right now is massive. We just saw that confirmed in the latest earnings reports. So, yeah, there's a lot of excitement around these companies right now, and for good reason. Now, let's move on to company number three on my list of those AI infrastructure stocks you should have on your radar. Okay, we've covered liquid cooling, that's adjacent infrastructure. Now, let's get into the core of this thing, the real meat and potatoes. And obviously, we have to start with Nvidia. Look, I'm not going to spend a ton of time on this one because it's been covered extensively everywhere you look. But here's the bottom line, Nvidia is simply a name you want to own. You need to own it. Now, you could argue that if you're already holding an ETF like the QQQ, you've got exposure to it that way. However, you want to get it, direct ownership through funds, whatever, just to make sure you have some exposure to Nvidia in your portfolio. The company's market dominance is incredible. And again, this isn't about what you're paying for today's earnings, it's about what those earnings will look like down the road. Sure, competitors are going to emerge. And yes, Nvidia probably can't maintain this blistering pace of growth forever, but it's extremely well positioned in the AI infrastructure space. And for many investors, it's simply a must own stock. Now, here's a question you might be asking, how long does that last? Is Nvidia just an early stage play for the AI build out? Once all these data centers are built, will the growth story fade? It's impossible to predict with certainty, but here's how I see it. This isn't a one and done situation. Technology never stops evolving. It's constantly improving, constantly changing. With Nvidia, it seems like every time they launch a new chip, they're already talking about the next generation and the one after that. There's always going to be innovation driving this forward. And these hyperscalers, they're going to want the latest and the greatest chip available. I'm not saying competitors won't try to challenge them, they will, but right now, dislodge Nvidia from its dominant position is going to be extremely difficult. The key takeaway is technology infrastructure isn't static. It's always evolving, so this isn't just a one time build out and we're done. That's what makes this story so compelling. Alright, let's move on to company number 4 on the list. Number 4 keeps us in the semiconductor space, but now we're looking at Broadcom. Broadcom is a chip maker focused on AI acceleration, and they play a really interesting niche role in this ecosystem. Here's what makes them different. They're producing what's called ASICs, that application-specific integrated circuits. Plus, they make high bandwidth memory controllers and the networking chips that AI systems absolutely need to function. So yes, they compete with Nvidia, but in more of an adjacent way. They're not going head to head in the exact same space. What's really fascinating is that Broadcom has its own partnerships with the major hyperscalers, Alphabet, Meta, Amazon, the whole gang. And here's the kicker. These companies are actually turning into Broadcom to design custom ASICs that could help them reduce their reliance on Nvidia. That's exactly why this stock deserves your attention. Performance wise, it's been crushing it, up about 51% for the year. But check out the recent momentum. It's gained roughly 40% just in the last 3 months alone. That's pushed the stock close to both its consensus price target and its 52 weeks high. The real excitement starts after the early September earnings report. Analysts have been falling over themselves raising their price targets. The most bullish call, Cowen just slapped a $420 price target on it. So Broadcom's already had a strong run. But here's the thing, with the tech sector likely to rally toward year end, especially with lower interest rates helping valuations, Broadcom is definitely the one you will want to keep on your watch list. Broadcom has been making headlines constantly throughout September, mostly because of that massive post-earnings surge. But the real question is, what did those earnings actually show? What's the concrete proof that demand for Broadcom's role in the AI build-out is real and sustainable? The big story is this. The companies are actively turning to Broadcom to help them break free from Nvidia's grip. That's a headline everyone's focusing on, and Broadcom isn't alone in this fight. You've got other chip makers like AMD trying to do the exact same thing, grabbing whatever market share they can get their hands on. Now, sure, Nvidia still dominates with roughly 80% of the market. That's a massive lead. But here's what matters. There's absolutely room for other players to carve out their piece of the pie. The demand is just that enormous. The market's big enough that multiple companies can thrive, not just a one dominant player. Alright, we've covered a couple of semiconductors plays. Let's move on to company number 5 on my infrastructure watch list. Number 5 is Supermicro Computer, and I know some of you might be skeptical about this one, given their financial reporting issues from earlier this year, but hear me out on why this company matters. Think about it this way. If Nvidia and Broadcom are the heart and circulatory system, moving data around, and Supermicro is the skeleton, the bones, the muscle, they build customizable servers and racks that integrate all those GPUs and chips from Nvidia, and that makes them absolutely essential to the hyperscalers. These companies need Supermicro's equipment to make everything work together. So as demand for data centers keeps climbing, demand for Supermicro's hardware naturally follows. It's that simple. Now there are legitimate concerns. Competitors are trying to break into this space, no question about it. Supermicro is betting that their engineer-to-order business model will keep competitors at arm's length. Whether this strategy works long term, that remains to be seen. Performance-wise, the stock's up about 48% in 2025, but unlike some of the others we've discussed, it didn't get a huge post-earnings bounce. It's only up around 4% over the last 3 months. The stock has hit resistance at the $60 level twice this year, but at least one analyst believes SMCI can push back to that price point, and then there are others who see even higher potential. So there's definitely room to run here for Supermicro. Alright, that wraps up my list of AI infrastructure plays worth watching. Now I want to hear from you. Which of these companies are you most interested in? Drop your thoughts in the comments below. I read every single one and I love hearing what you're thinking about. If you found this helpful, hit that like button and subscribe if you haven't already. We are covering AI infrastructure and market opportunities every week. Thanks so much for watching, and as always, happy investing. I will see you in the next one.